皆様大変お待たせしております。続きましては変革の波ビットコイン ETF と既存金融のビットコイン進出の影響と題して英語でお届けいたします。こちらの QR コードからスマホで日本語字幕が読めますのでどうぞご覧ください。Thank you for waiting, everybody. Our next session is titled The Transformation Wave, Impact of Bitcoin ETFs and TradFis Bitcoin Entry. 早速皆様をご紹介いたしましょう。Our guest panelists are Katherine Dowling from Bitwise Asset Management, John Cahill from Galaxy Digital, and our moderator is Justin Dhingra from Crypto Garage. Please give it up for everybody. Please come to the stage. 拍手でお迎えください。
Good afternoon, everyone. Thank you for coming here. We're joined by some esteemed guests today. I know it's been a long day, and this is the last session at the Bitcoin.jp stage. I'll do quick intros, give you some context of today's talk, and we'll shoot off questions to our wonderful guest. So yeah, I'm Justin Dhingra. I'm the Chief Business Officer at Crypto Garage. Crypto Garage is a licensed, focused crypto financial company in Japan. We provide regulatory custody and trading solutions to institutional investors, and we work closely with financial institutions and regulators in Japan. We're joined by two industry leaders in the Bitcoin ETF space, Katherine Dowling from Bitwise Asset Management, and John Cahill from Galaxy Digital. And just to start off, for everyone's benefit, could each of you kind of describe what you do, how your firm is involved in the US Bitcoin ETF space? So Katherine, can we get you started? Yep.
Yes, absolutely. Hi, everybody. Happy to be here. Katherine Dowling. I'm on the executive management team at Bitwise Asset Management. And I also am the general counsel and the chief compliance officer. So what I do in my role is I help lead product launches. And we are obviously in an area that is highly regulated and in an area where we are often launching novel products. So one of the products I helped launch last year was the Spot Bitcoin ETF, followed up by the Spot ETH ETF. And we are also looking at launching a number of additional products with digital assets as the assets, including a product that is an index of the largest by market cap digital assets. So this involves a lot of dialogue, as you can imagine, with the regulators, and not just one, because we have many regulators in the United States. So it's a multitude of regulators that we speak to, and in fact, even within the SEC, which is our main regulator, there are divisions within the SEC. So launching these products often involves conversations with kind of both sides of the house, if you will. In addition, I spent a lot of time in DC talking to members of Congress. So the senators and the members of the House are all obviously very important in this process as well. I think if you guys have been following some of the legislation that's been coming down, we were lucky enough to get a stablecoin bill out and hoping that later this fall we will see what we call a market structure legislation. That's a bigger, meatier piece. We'll get into it post the intros, but just laying the land of kind of some of the areas that I work on at Bitwise. And we're a crypto asset management firm specialized just in crypto.
Thank you. John?
Sure. John Cahill. I run Asia for Galaxy Digital. We do a whole bunch of stuff in crypto. We have an asset management business, which does, of course, ETFs. We have a venture business. We have a bunch of passively managed funds, more like mutual funds. We have a trading and investing business that does facilitation for clients as well as our own proprietary capital. We do market making. We provide liquidity to exchanges. We do investment banking, M&A and advisory work, all focused on crypto. And we also have a data business that used to be a Bitcoin mine. And so
I'm not sure if you know, but we worked with you guys on 2 acquisitions. We're just meeting each other.
There you go. Yeah.
We worked with you guys with the Galaxy side of your business.
So I do like to say there isn't a conversation in crypto that we can't have and either be a solution provider or an investor. we really do span the gamut of everything that happens in this space. And certainly we have great partners all around the world that we have done the Bitcoin ETFs with. We have partners in Canada, Itaú in Brazil, DWS in Europe, and there will be others to follow as we kind of continue on our global march and expansion of product. But yeah, I was in New York for the official launch of regulated Bitcoin access, and it was one of those true only in crypto moments with the SEC false start and the Gensler SEC X hack. But maybe there was no other way for it to be for long suffering crypto participants.
Yeah, it was really slow until it was very fast.
Lots of preparation.
yeah, years in the making.
Yeah.
But then the run up was a lot.
Yeah.
A lot of feet on the gas, getting it going.
Yeah. I mean, from the outside, it's such a watershed moment and gave so much access to many investors in the U.S. With the Bitcoin ETF launch, have you noticed any kind of significant change in the market structure or price discovery of Bitcoin? Yeah. Has there been any new innovation with the launch of Bitcoin ETF?
I mean, it was truly a door opener because there are so many potential investors that were sitting on the sidelines that didn't have a way to invest. Now, many can go out and do their own wallet, et cetera, but there was a lot, and there still is a lot of capital under the financial management of financial advisors. And for the financial advisor to be able to work with their client, having a tickered product that provides access to Bitcoin exposure, as does the spot Bitcoin ETF, same for spot ETH, but to ETH, was quite a game changer, and frankly continues to be. It's really been a door opener for a number of institutions to come in, and there's really still more coming. Some haven't even been able to get in because once the product's launched, they then started their diligence process for being able to invest in it. So we're seeing kind of another wave of institutional capital come in with that process, because they have a fiduciary duty to their investors to make sure that they've kicked the tires, they've gone through a fulsome diligence process. In fact, some of the processes that people do of our product, BitB, it's 600 questions, right? They're really going through it because of that fiduciary duty. And so they're doing what they should do, but it takes a long time from the product launch. So we're seeing a lot of that sideline capital that's now coming in, and then other additional uses for it, for liquidity, et cetera. So it's a big liquidity enhancer for sure.
Yeah.
I mean, I think the story of Bitcoin since its founding is one of education, and access, and very few things, I think, even into the future, will be as monumental a game changer as being able to use your existing infrastructure, your existing account to access, a Bitcoin proxy. And I think that's the watershed moment, and it kind of in some ways created this permanent place in capital markets for Bitcoin, where I think there's some level of existential risk when it's kind of outside of the traditional financial market. You have to do these special wallets and go to these exchanges that are, sometimes don't have great transparency or understanding of where liquidity comes from. This removes a lot of the barriers to entry for, my dad to get access to the asset. And what it demonstrated, and the roaring success that Bitcoin ETFs have demonstrated, is just how much appetite there is for this stuff. And I think we're even seeing more of that now with some of the treasury companies that are coming to market as another vehicle. And I think it's just another layer of new participants getting involved in the space. And so, when you live and breathe crypto and you surround yourself with conference participants and all these companies that are getting built around it, you still don't appreciate how deep the penetration is or isn't. And every time you see this new access point and the overwhelming participation, you realize, that whole thing, we're still early, blah, blah, blah. Like that's less and less true, but it's still not as ubiquitous as we probably expect it to be over time. And the ETFs are now just a permanent part of portfolio construction. And I think having a zero allocation to Bitcoin is completely fine. Just like a zero allocation to gold is completely fine. But it is on the menu, and it's not going away.
Yeah, it definitely kind of changed the landscape. Now, in the U.S. market. Also, Japan is taking a closer look at the Bitcoin ETF. They're working on changing their regulation. It's a long journey. They're working on changing the tax treatment on spot crypto. What do you think there are some lessons that Japan can learn from the U.S. in terms of going through that long journey, the regulatory process? Some of the things that Japan keeps asking is hacking risk. In terms of hacking risk, who's liable, how much loss is burdened on the investor or the issuer. That's been quite a sticking point in Japan. I'm kind of curious what the U.S. has been thinking about the risk associated with Bitcoin ETF.
Yeah, one thing we did in the lead up to the spot Bitcoin release, and hopefully it won't take 8 years like it did for us. I mean, we were working on this product, like I said, it was long until it was short, with many false starts along the way of putting in documents and the SEC saying no and asking for more research. I think Bitwise provided about 500 pages of research to the SEC in a back and forth dialogue over the years. And ultimately, what ended up happening was a lawsuit, not our lawsuit, but a lawsuit from another issuer who just said, you know, we're gonna sue the SEC and go after this issue. I won't get into all the technicalities, but track me down. I'm happy to if anyone's interested. But that was actually a pivotal moment of pushing the ball forward. So. The evolution of Bitcoin, of initially having it be pretty much ignored by the regulators, and I think for some of them there was probably a hope that it would just go away, and if you regulated it, maybe you were giving it some sort of bona fides that it didn't deserve. And then it migrated into a place of, as if you followed the headlines over the last few years under the Gensler era, of kind of the opposite of, okay, we're going to really go after crypto and we're going to make it really hard for crypto companies to get banked. We're going to make it really hard for products to get launched. We're going to have unfavorable tax positions. We're going to make it so that any custodians we might think of, it's harder for them to custody it. It's more expensive. Like at every turn along the way, it was just harder, harder, harder. And then layer in a number of enforcement actions that were really predicated on how we define these digital assets. Were they securities? Were they not securities? Were they something other? But Gensler's SEC wanted to paint them all as securities, which placed this under the SEC's jurisdiction. Now, fast forward to present day, in a new administration and a new leadership at the SEC, you're really seeing a sea change in how digital assets are viewed. And if anybody had a chance to read Project Crypto, if you haven't, go read it. It's really a good forward-looking document on how we should be looking at digital assets and how we should be treating them. While also not ignoring the fact that it is a volatile asset. There are risks that are inherent in crypto. There are risks. I was a former U.S. U.S. attorney in the States, so I was on the other side of going after the criminals, right? So anytime there's any asset of value, there's going to be somebody trying to get after it. So it's of course important to be concerned about how you protect it and make sure that there's a cottage industry of companies growing up around just that, like companies like Chainalysis, things of that nature. And a lot of the law enforcement in the U.S., they're now working with some of these types of companies to make sure that they can try to protect these assets if we have victims of these assets, hacking being another aspect of that. So it is incredibly important, and it's important, and it comes up in the agreements with our third parties, just like other issuers when they're having agreements with third parties, whether it's the custodian or the administrator or the APs who do the trading of these products, looking at where that is there indemnity, or where does at which link in the chain is there going to be who's on the hook for if something goes south or something goes wrong. So that does become part of the dialogue, and it's complex. But yeah,
So yeah, there was hard decisions to be made, some trade-offs, and what's possible and not possible. I guess the political environment was a factor on the delay, but now it's a 360-degree turn, and it's like day and night, and I think things are easier from your side.
I think they're a lot easier. And it doesn't mean that the regulator is still very much going after fraud, but there's the now not a realization, because there were obviously members, there were the minority commissioners that already felt along these lines, that we needed to do some work with Congress to define what these were. It's really hard to go out there and just say, we're going to enforce charges against you because we think this is a security, when that wasn't at all clear. So now with the market structure legislation, that's the dialogue that's going on now. It's, well, how do we define each of these types of assets? What's going to place the digital asset into the security bucket? What's going to place it into a different bucket? And making sure that we're not catching in the nets areas that we want to, where we want to foster innovation and create sandboxes where we can make sure businesses aren't afraid to engage because there are unknowns, right? So that's an important part of the dialogue, and it's an important part of the conversation that's going on right now around market structure. But I mean, for Japan, I mean, one thing we did, the U.S., obviously there were many countries before the U.S. that already had ETFs, so it was particularly helpful. We put together a document when we would go and meet with senators and members of the House, and we had this research document that was put together, and we would show, here's how it's operating in other countries, it's working, and here are the steps along the way. So it helped pull it out of the academic and into the actual, to be able to show that research. And obviously, for Japan's purpose, to getting to that end, they will have all of the now U.S.-based as well, just to show that it does work operationally.
Like, regulators speak. No one's operating in a silo. I think the U.S. takes a leadership position in a lot of things. I think that was why it was such a watershed moment, and I think they should collaborate with their counterparts globally. Right? I think Japan is now an outlier for being a very well developed, deep capital market without access through an ETF product. And so who does that help and who does that harm? Who does it help when retail ends up getting access in a different way, in a different format that isn't as well protected, that isn't sanctioned and overseen by the regulator? I don't think you're actually making a strong argument that you're helping protect retail. At the end of the day, I think the regulators, at least one of the primary concerns, is looking after small investors, in this big pool of capital markets. And the largest capital markets on the planet have gotten around it, and they assign responsibility and accountability. A lot of the regulation, it can be deterministic on who is accountable if something goes wrong. What type of insurance program do you have to run on the side of it? How much has to sit in cold? There's an awful lot of prescriptive requirements you can have to enable a path. And so I think we're kind of a little bit beyond finding reasons to say no, which is ultimately, through the litigation that Katherine was talking about, Gensler ran out of reasons to say no, and still tried to the very end, and put kind of a dissenting position through the SEC days before they were approved, but they ran out of reasons. Accountability and responsibility was borne by the issuers. The roles were defined, and so I think it's just a function of enabling the path forward. I think the long gone are the original reasons to not enable it. And look, investors are going to find a way to get access. I would always prefer a regulated channel as an investor versus going through an unregulated channel.
And to your point, it's a really good point that you're raising. And I think that had the regulators engaged earlier, instead of ignored it and then gone after it with a pendulum swing, we probably could have avoided some of the mishaps, the FTXs of the world, right? I mean, that was offshore. And when retail investors and institutions too are looking to invest, if those are their options, they're likely to take on those risks and invest in other products where there is a lot less information available than there is for an ETP or also the 40 Act ETF products as well. So it's too bad that it was that much longer, and that might also be something helpful for Japan too, because people will go find where they want
Other ways.
Yeah, they'll find other ways, right? And this just gives them a safer option, not a 100% safe, because it is a volatile and risky asset, but a much better, at least informed way to go about investing in a product, and an easier way where it's in the fold of your financial advisor's purview. They can work with you on it. They can help diversify and make sure that it fits in your portfolio and what percentage, et cetera.
Yeah, so to John's point, Japan doesn't have a reason to say no anymore. And it's funny that you're looking at the history of Japan crypto regulation. In 2017, it was the first country in the world to have crypto regulation, but they brought it under the Payment Service Act because they thought Bitcoin was going to be used as a method of payment. But now, 6-7 years later, the U.S. has set a kind of precedent to say it's a financial instrument. And Japan is sorting out their regulation to bring it to financial instrument. And I think the U.S. kind of went through the similar path. It was under money transfer for certain states. New York had a bit license. It was a whole mess. But do you think the U.S. Bitcoin ETF has kind of clarified some of the regulation in the Bitcoin space?
I mean, I think it's certainly helped with that particular product, but you do still have a lot of areas where you have a web of kind of state regulation. Even with the stablecoin bill that passed, I mean, part of that bill that is a positive is that it creates that kind of federal. Here's the federal view. There's states still involved, and that's still part of the dialogue. You can waive, et cetera, but after a certain point, here's the federal overlay. And that just helps, if a business is entering the space and it's completely unclear that they might have a foot fault here but be okay there, it's just going to make it more expensive, more painful to try to do business. And some, as we saw in the US, just left the country to do business elsewhere because it was too unwieldy. They were spending millions trying to get a flavor for what the framework should be. And when I talk to senators, I say, look, these are good people. These are not your Senator Warren fraudsters. These are people that are just trying to do business in the United States, trying to bring tax dollars to bear, but they just don't know what the clear path is. But unfortunately, at that point, we had an SEC that it was hammer nail, everything's a security, and they were looking to kind of push it to the side and get rid of it. And the Biden administration just kind of let the SEC do and didn't show any executive leadership in that regard. They're like, the SEC is the expert, we're going to leave it in their hands. So it just it became a really hostile environment for crypto in the U.S. But despite that, as John said, right, despite all of that, the spot Bitcoin was born during the Gensler administration. So just think of that, all of these horrible bad factors, and the baby was still born, right? Yeah. So it's actually, just goes to show you that the power of, once you get people learning about this, and by people I also mean members of Congress, they see, they see the benefit, the technology, et cetera. It's not just, when you first talk to members of Congress, they think, oh, well, we don't need 1 million currencies. And then you go through all the different use cases and the different business models, and that it's really not about 50 different ways to pay for a cup of coffee. It's also about a new technology and just changing how we do finance. And that's an area that actually has needed modernization for a long time.
Yeah, so the new store value of money resonated, and kind of the industry's determination got through the launch of the U.S. Bitcoin ETF. For John, I know you cover APAC, and maybe you've seen similar ETF or ETP projects in other regions. Do you see other countries trying to make the ETF product successful, or are there some challenges that the Asia region is facing?
Usually the challenges are just creating more barriers to entry. Mm-hmm. And so we have ETFs in Hong Kong. We're going to probably have ETFs in the near future in Korea. They don't have huge adoption because there just isn't critical mass of investment there. And there are other channels that were first and way bigger and more liquid. And so, liquidity begets liquidity. If you have a product that's liquid, you're going to attract more participation. Doesn't mean it's going to go up or down. But over time, in kind of a perfect system, the biggest liquidity will continue to grow because that's where the action is. And so anytime there's a border barrier or some other kind of barrier, then liquidity is going to go somewhere else.
Okay, that makes sense. I guess in terms of liquidity, there's been a lot of liquidity traded out of the Bitcoin ETF. When a institutional investor has to decide, should I buy physical spot versus going through the ETF? Katherine, when you answered the first question, you answered that having a regulated process gives comfort to an institutional investor. But do you see somewhere in the future, for a question for both of you, somewhere in the future where institutional investors will seek out to buy Bitcoin physical spot and have a wallet, because that's the original ethos of Bitcoin, the Satoshi paper, self-custody, right? So I'm kind of curious that institutional investors, they're paying a fee for these ETFs. If they're operating at a scale, would they make that conversion to physical spot, and without going through a third party? So I'm curious what your views are on that.
I'm going to jump in first there.
Yeah.
Maybe. The reality is, if you're managing a permanent pool of capital in the form of a pension fund or an endowment, part of your job is to not get fired for making an error. Part of your job is to not create a new process that has extra complication and, take it to your boss or your investment board and say, hey, we should definitely do it this way, even though we're getting this exposure almost one for one and paying a small management fee for it. So I'm not sure that if your first foray into getting crypto exposure on your books is through an ETP or an ETF, I don't know that you ever make that leap, or at least not in the short term. Now, if you're talking about more decentralized finance, more things to do with the assets themselves, and if there's still a restriction on ETFs being able to participate in staking, to participate in DeFi technology that comes, well, now that would be the driver for owning coin directly. So I could definitely see that being the main driver, but it's an economic driver. I don't think you ever look at your wallet and look. We've seen whales who have tens of thousands of Bitcoin move into ETPs and ETFs for a portion that they want to trade, listed options, or they want to take some element of self-custody risk away. So we've seen that more than the other way around. But I think unless there is more financialization of crypto assets, then I don't think the incentives will be there to kind of take the additional operational burden and the risk onto your team, so to speak.
Thank you. Kath, do you have a view? Or
we're seeing a lot more of the movement into the ETP. And, who knows over time what may evolve, but just because there's just more they can do with it and more ways to use it, and the liquidity is obviously there, options as well. So we're seeing a lot of that movement in folks or institutions who have large stores who do want to move it into the spot Bitcoin ETFs.
Okay, thank you. So other question is, I guess the evolution of ETF products. From an asset manager's perspective, what are kind of the next evolution? This is a Bitcoin ETF talk, but I'm sure all investors, they want yield. So in other chains like Ethereum, they're staking, but is that kind of the next evolution of ETF products after the spot Bitcoin ETF?
Yeah, I mean, we just got in kind, and that was a big drama in the lead up to just the initial launch of spot Bitcoin and spot ETH, because all of the issuers were hoping to get in kind and cash, and the SEC said it's going to be cash or you're not going out. So of course it was cash, which is obviously works. It has been working phenomenally well. Being able to do it in kind is just more efficient and ultimately a better process. And in fact, the European ETFs, they have in kind. So again, another area where that's been a good example that we can point to for the regulator to say, look, it's working over here. We own a company in the UK that runs these products, same as we have in the US, but they're further along the curve because they have staking and they have in-kind. So anyway, we did just get in-kind, and those trades are now happening, which is great. And staking is something that we are actively working on, as are a number of other issuers for Ethereum and for the Solana ETFs. There are a number of issuers that publicly have filed Solana ETFs, and a big part of that dialogue has been how to do staking. And getting that approval, and the SEC has already said that they're not opposed to the staking, which is great, and that's been part of the learning and part of the dialogue. But there are complexities with staking because of the entity that's typically used for the ETF, which makes it, from a tax standpoint, difficult. So now there's a push from a number of us and folks in the industry to try to get Treasury to opine on whether or not staking out of what's known as a grantor trust entity is going to cause an issue ultimately for the status of the grantor trust status. So you get into like some tax land issues. So if you're following this, you'll see that there's been a lot of letters filed, and our name Bitwise has been on a few of them, asking Treasury to put forth some guidance in terms of would it be their determination that if staking is done out of these grantor trust entities that it's going to blow up the status? Because grantor trusts are supposed to be, set it and forget it. They're not really, it's not a status. It's not an entity where you're supposed to actively be managing it. So staking is next, but of course there's always complexities. Yeah. And again, we have it in Europe, so.
and in Japan, staking is offered via the retail crypto exchange, and it took a while. And staking, there was this whole discussion, is staking a securities product or a deposit product? And Japan went towards the deposit product route. So you put ETH in a retail crypto exchange and you earn yield automatically. But because it's viewed as a deposit product, and certain staking protocols, there are capital risk, like with slashing. So who's going to take the slashing risk? And it has to be the service provider, the VASP, right? So it's interesting that each country has their own interpretation and own roadblocks, and having these conferences can we could share best practices, and it's interesting that there's a tax issue from the U.S. side. Maybe John, I would like, what kind of innovations do you go?
No, I mean, I think there's convergence over time. These things still are new. Regulators are not fast, nor should they be. They need to be deliberate. They don't want to walk back things that they kind of put out into the universe. So I think that's sensible, and it takes time. But look, there's no shortage of businesses, companies, individuals to collaborate with on this stuff. We spend all this time at conferences, on panels, doing education, in private sessions. It's a huge part of the industry, and it's kind of our responsibility to educate where there needs to be education, to articulate use cases, to show where protection isn't as strong as it might be. And I would say, in my experience, and this is true, I can definitely say in Hong Kong and in Singapore, the regulators are very receptive to those conversations. They're not resisting knowledge. They just want to, when they go to market with something, they want to not have to backtrack. That nobody wants to look foolish, and it's their responsibility to kind of be very thorough before they do that. And so, just from a pragmatic measure, I think it, we'll just continue to see more types of innovation. I think we'll see more sophisticated products wrapped in an ETF wrapper, more with yield, or maybe some embedded optionality and things like that. These are all things that are financially possible and easily engineered in the kind of asset management aspect of it. So I just think we'll see more of that stuff. Katherine's a lawyer. I'm a trader, and so I'm pretty close to a free market maximalist, And so I think, and like when you kind of wrap it in regulatory clarity, I think that's where you get the most participation. And so I think that's ultimately good for markets. It's good for price discovery, and it's good for building out a complex portfolio to express any kind of, investment decision you want to have.
Thank you, John. So we're approaching close to time. So I just want to kind of wrap up. But yeah, I appreciate your time, Catherine and John. There are a lot of best practices that Japan wants to learn from the US and from other countries. But yeah, the launch of the Bitcoin ETF was such a turning point, and Japan is starting to explore and decide the regulatory framework and the tax issues. So, Japan wants to keep in touch, make sure they're not left behind. But yeah, we look forward to your developments going forward. But I appreciate your time today.
No, absolutely, and it's a global asset. So the more we can get other countries going, just like when we would go and meet with European regulators with products that had already launched there, it was very helpful in educating stateside. So comes around, goes around.
Yeah, exactly. John, maybe a last word.
Yeah, look, I mean, I think the ETF is the first kind of step towards a more regulated environment for lots more products to come, and I think it really is just the beginning of a lot more tokenization. If I think about 12 months, 24 months, 36 months down the track, way more assets will be tokenized. The Larry Fink, everything will be tokenized sort of mantra, I actually think it might take longer than a couple years, but I think directionally that's where it's going. The plumbing of blockchain is demonstrably better. And so you get actually increased safety, increased transparency as an investor, and like regulators love that. And investors love that. And look, I think some of the borders that we have today will start to come down as more of these products become tokenized. ETFs themselves are tokens. If you actually want to kind of boil down the fundamental representations, you own a ETF, you don't own a Bitcoin, you own a tokenized version of a Bitcoin. And so I think we're going to see a lot more of that as systems become more resilient, regulators get more comfortable, and the demand from retail and institutions alike can continue to persist.
Yeah, it's an exciting time. There are a lot of positive momentum. So let's just kind of keep up with the progress. So I appreciate your time, and thank you everyone for listening to us.
Thank you.
Yeah.
Thanks everybody.
Thank you so much to our panelists and moderator. Could we please get the three of you to come to the middle of the stage for a quick group photo by our official photographer? Thank you very much. A round of applause, please. どうもありがとうございました。